Good morning and welcome to Viscofan's presentation for first half 2021. Here with me is Mr. H121 Canales, CEO of the Viscofan Group, who will be commenting the results. Before starting the presentation, I would like to highlight that this document may include a statement about the intention, expectation or forecast of the company, additional to the mandatory financial reporting whose sole purposes is to provide information more accurately about the perspective of future behaviors. Such intention, expectation, or forecast do not constitute any guarantees of compliance and involve risks, uncertainties, and other relevant factors that could cause actual developments and results to differ materially from those stated in such forward-looking statement. This circumstance must be taken into account mainly for all persons or entities that may have to take decisions, develop or spread opinions relative to various issues by the company, and particularly by analysts and investors that handle this document. The financial statements contained in this document have been prepared under international financial reporting standards. This financial statement that has not been audited and consequently is susceptible to potential future modification. Now I hand over the presentation to H121 Canales.
Good morning and welcome to the results presentation of the first half of 2021 of the Viscofan Group. As you can see, the results have been very positive, considering that the comparative base is very demanding. We have grown in volumes versus 2020, a period where the pandemic lockdown caused strong growth in demand, particularly in the second quarter. In 2021, the population is resuming their consumption habits of the situation we had before the pandemic, due to vaccination against COVID-19 and the lower restrictions. Even though the situation is improving, pandemic continues active, and in Viscofan, we are maintaining the protocols to protect our team, assure the supply, and avoid the virus propagation. In this context, the casing market is also normalizing its growth. If the former year the sector experienced a growth acceleration, especially during March and April, due to the need of essential ingredients provisions of the food industry, in the first half of 2021, market is growing in line with the long-term historical evolution, highlighting the Asian region and the collagen casing recovery in Europe. In addition to discussing the most relevant aspects of these months, I would like to take the advantage of this presentation to update you on the latest developments in our Sustainability Action Plan. We continue to take steps towards our goal of reducing the carbon footprint of our operations by replacing traditional cogeneration engines with new engines that are not only more efficient but also ready to partially use green hydrogen as a fuel. In the drive for a circular economy, this quarter we have launched a new line of products named H121. It is a new plastic casing made with either biological origin raw materials or recycled-based materials. While we help our customers in their circular economy goals, these H121 products will allow us to increase our sales percentage coming from natural, biodegradable or recycled material casings, currently rated at 85%. In addition, we have set 2030 objectives within our sustainability plan to reduce the intensity of emissions, water withdrawal, and waste sent to landfill. These sustainability commitments have been linked to the financing cost of new borrowing agreed in 2021 for up to 35 million euros, replacing part of the traditional financing. Puts us as pioneers in our sector in establishing long-term sustainability commitments and linking them to financing. As commented before, first half results have been very positive, with growth in the principal financial figures. Beginning with the top line, which has grown 4% in the first half and 5.6% in the second quarter, double-digit growth in like-for-like terms. This growth has led to a 10% increase in EBITDA in both the semester and the second quarter, and to a double-digit growth in the operating profit and the net profit, driven by the margins improvement that I will comment during the presentation. In the first half of the year, revenues amount to 466 million euros. This is 4.2% higher than the previous year. This is a significant growth considering that in the first half of last year, the demand accelerated due to the necessity of essential ingredient supplies of the food industry. Volume growth in a greater extent and the improvement in price mix contributes 9.8 points to the revenue increase. I want to highlight the good performance of all casing families, especially collagen, with double-digit growth, as well as fibrous, where in this third quarter we will count with new capacity in Caseta to keep on growing. Energy sales are almost flat, while the weaknesses of the US dollars and the Brazilian real against the euro erodes almost 6 points to growth, or close to 26 million euros. By geographical areas, it stands out the growth in Europe and Asia Pacific with 7.6% in reported terms and 9% in like-for-like terms, driven by Asia and especially in China, with a completely recovered market where the casing aimed to replacing hog guts are having a positive adoption. In addition to China, in Southeast Asia, the growth has been solid as well. In Europe, as mobility restrictions are reduced and social events increase, the market is resuming more common consumption habits of a pre-pandemic situation, prompting the collagen casing recovery. In North America, reported revenue grows 1% against last year and 9.2% in like-for-like terms, excluding the currency impact thanks to the volume growth in all product families. Latin America, there is a mixed situation. On one hand, the reported revenue decreases 1% because of the weakness of the Brazilian real, but in like-for-like terms it grows by 15%, driven by higher volumes and a commercial strategy oriented to counteract the currency's weaknesses. The growth seen in the first half corresponds to a positive evolution in both quarters. In this second quarter, revenue increased by 5.6%, with casing sales growing 5.5%, and energy sales growth by 7%, bringing the total revenue figure to 237.5 million euros, close to the all-time high of 240 million euros achieved in the fourth quarter of 2020. Thus, as you can see on the screen, like-for-like casing sales maintain the momentum, contributing to growth with over 9 points. Energy revenue improves thanks to the higher electricity price in Spain and contributes with 0.3 percentage points, a trend reversal versus the previous quarter. In contrast, Forex impact continues to be negative, eroding 4.4 points growth in the second quarter. Nevertheless, this impact is softened compared to the first quarter of the year. As in 2020, we combined higher revenue and increased profitability. We have offset an environment of inflation of energy costs and of some raw materials such as polyamides and glycerin, thanks to the operating leverage of higher volumes, commercial discipline, the high operating efficiencies achieved, our procurement and hedging policies, and the decrease in the cost of collagen hides. Thus, consumption costs in the first half increased by 4.4% compared to the previous years. In the context of hiring personnel to carry out the expansion projects, our average workforce exceeds 5,100 people. That is, this is 4% higher than in the first half of the last year, and personnel costs grow by 1.7% in reported terms. Other operating expenses rise 2.6% over the previous year due to the 9% increase in higher energy supply costs and higher transportation costs, which grow at a double-digit rate. As a result, reported EBITDA in the first half increases by 10% and EBIT by 15.6% once the depreciation expense has been deducted. In the first half of the year, EBITDA amounts to 121 million euros. This is 10% higher than the previous one. Thereof, the strength in the like-for-like growth with 23% growth over the previous year counteracts the forex weakness that erodes growth by 13 points. Second quarter has a similar trend with like-for-like EBITDA growing at a double-digit rate of 18%, whereas the forex erodes growth by 9 points. Consequently, reported EBITDA in the second quarter reaches 63.8 million euros, an increase of 9.5% compared to the second quarter of 2020. In this sense, I want to highlight the new technology installed in Caseda, which is enabling us to progress in terms of speed, automation, reduction of productive waste, both in cellulose and in fibrous. Not only in Spain, but in other plants of the group too, excluding the US, high productive efficiencies are being reached, increasing the operating profitability. This way, accumulated EBITDA margin in this semester improves 1.4 points, up to 26.1%, and 2.9 points in like-for-like terms, up to 27.6%. In the second quarter, EBITDA margin improves 1 percentage point, up to 26.9%, and 2 points in like-for-like terms, up to 28%. This operating growth is also reflected in the net profit, which grows 12% in the first half, despite the negative impact of the exchange rate of minus 0.9 million euros in the first half registered in the financial results, while in the first half last year they were positive and up to 2.9 million euros. Effective tax rate is 23.6% lower than the 24.5% of the first half of the year, due to the growth in countries with lower effective tax rate. These results come with a higher investment activity, even though it is still far below our investment carried out at the beginning of the strategic plan, More to Be. In the first half of the year, we have invested a total of 24 million euros against the 15 million euros of the first half of 2020. Implementation of the main investment projects evolves as planned, and we expect to reach our investment goals of 70 million euros for the full year 2021. In Caseda, installation works for the new production line of fibrous casing will probably finish in August. This is going to be another milestone for Viscofan because in less than 2 years, the fibrous capacity installed stands with levels according to the leadership we want to reach in the industry. Regarding capacity increase, I also want to stand out the investments of collagen in China, which will be available next year and are backed by the solid demand evolution this year and the growth perspectives in the medium and long term. Within the optimization axis, I would like to stress the investment in North America. Technological upgrade of the collagen casing plant is very advanced, which we expect will provide us with savings of up to 2 million euros during the second half of the year. Also in sustainability, as mentioned before, the spearhead is Caseda, whose transformation will help us to reduce the carbon footprint of our operations. Not only we are replacing cogeneration engines and boilers with capacity of green hydrogen as fuel, but we are also working on supply terms, probably the industry's bottleneck, to make the evolution real. In this sense, the first trials of green hydrogen use are expected to be carried out in Caseda in late 2021, allowing us to know better the starting point for this emotional change. These results come with cash generation in the period, allowing us to cover the investment and working capital requirements, pay the shareholder remuneration, and reduce the net bank debt to 6 million euros at the end of this period versus 38 million euros in December 2020. Bank debt includes the mentioned loans with financial expenses associated to sustainability parameters that substitute part of the traditional debt. In short, these results reflect our vocation for growth in a market that grows driven by a very solid fundamentals, as demonstrated these months, not only in emerging regions such as Asia, but also in developed areas of Europe and North America. Our business model enables us to capture growth and improve the profitability gradually, thanks to the commercial discipline, the attainment of productive efficiencies, technological developments, and cost control. Despite a demanding and volatile context, results of the first half place us in a very good position to achieve the expected results guidance for the year 2021. We can look to the future with optimism. We have a solid balance and a business model, an exceptional and committed human team, enough guarantees to carry out present and future investment projects and take advantage of the growth opportunities that will undoubtedly arise for Viscofan. Thank you very much for your attention.